You're listening to Transmission, expert analysis and insights into the latest trends and developments in the energy market from APA Group.
Time for the gas market review to solve a decade-long energy crisis by Adam Watson, CEO and Managing Director, APA Group. Walter Ritson, the long-serving CEO of Citibank, famously said, "Capital goes where it is welcome and stays where it is well treated." Late last month, APA announced a $500 million investment to expand our East Coast gas infrastructure to address bottlenecks in the gas pipeline network and ensure we can transport the gas needed to meet the projected shortfalls in southern markets later this decade. We made this announcement off the back of the federal government's December 2025 gas market review report. While consultation on design of an East Coast gas reservation is still ongoing, the report has sent all the right signals for continued investment in domestic gas infrastructure. The report recognises the critical role that gas plays in our economy, for industry, and to support the energy transition, building on the government's 2024 Future Gas Strategy. It recognises the need to prioritise Australian gas for Australians via a domestic gas reservation scheme, along with the need for regulatory reform to put downward pressure on gas prices and ensure energy security for our country. The importance of energy independence has been underscored by the escalating conflict in the Middle East, which provides a stark reminder that we should never rely on offshore markets for a product that sits right under our feet. A well-designed East Coast gas reservation presents the opportunity to end a decade-long gas supply crisis. Almost 90% of gas consumed domestically supports Australia's key industries. Put simply, without reliable, affordable gas, industry and commercial businesses in Australia will come to a grinding halt. Domestic gas also supports Australia's significant LNG export market, delivering economic benefits for Australians and energy security for our trading partners. We're talking around $65 billion in annual export earnings alone. More than 68,000 petajoules of proven or contingent resources are available in Eastern Australia to serve an East Coast domestic market that consumes around 500 petajoules each year. Victoria's energy basins are in decline, but between Queensland and the Northern Territory, there is enough gas in the ground to support both our East Coast domestic market and Asian LNG customers for decades to come. Emerging new basins, such as the Beetaloo Basin in the Northern Territory and the Taroom Trough in Queensland, can underpin our prosperity beyond the gas that's already being produced. Their development can only be good for Australia. We also know that an East Coast reservation will put downward pressure on gas prices. In Western Australia, where a reservation has been in place since 2006, gas prices have averaged around $8.20 per gigajoule over the last 3 years. Over the same period, the Victorian gas price has been $12 per gigajoule on average. Looking back further, over the last 5 years, gas prices in WA have been, on average, almost 50% lower than gas prices in Victoria. An East Coast gas reservation also means the disastrous situation of importing expensive gas from global markets. The UK's reliance on LNG imports has saddled its economy with some of the highest electricity prices in the world and taken away its energy independence. At the mercy of global markets, gas prices in the UK doubled in the days following conflict in the Middle East. Contrast this to Victoria, where prices declined to just over $8 during the last week. As Federal Resources Minister Madeleine King said last week, "The reservation we're working on is about building resilience in supply and making sure Australian manufacturers and Australian consumers have the gas they need at affordable prices." Investing in Australia's gas infrastructure is a logical, proven, economical and timely solution to meet domestic gas needs. APA's $500 million investment in transport infrastructure will add approximately 30% north to south transport capacity when completed in 2028, building on the 25% increase already delivered over the last few years to support energy security. It demonstrates that when the policy signals are there to attract and welcome capital, the private sector can get on with delivering what's needed without market intervention. APA is delivering the East Coast gas transport capacity, and there's plenty of domestic gas in the ground. Domestic gas supply is not a constraint, and transport capacity is no longer a constraint. The last piece is the introduction of a domestic gas reservation so Australia's domestic gas market can get back to doing what it does best, powering Australian homes and driving Australian industry.
For more energy industry insights, please visit apa.com.au/transmission.